Hello guys, this is forexbrokers.net, and this video starts a series of 3 videos explaining triple combinations, one of the most complex, if not the most complex pattern with the Elliot Waves theory. And just as we've explained, just as I've explained on the double combinations videos and article that came with this Trading Academy, we will start with the theoretical concept and the most common triple combination on the FX market, and not only begins with a flat pattern. And the flat pattern goes like this. You will have a segment. Let me try to put it here. There is a segment, or the market makes a move lower, then a pullback that goes beyond 61.8. Let me put it here. A pullback that goes beyond 61.8, and then another leg lower that makes a new low. In this case, if we label this one as wave A, we see that the B wave's ability to retrace beyond 61.8 of wave A, it implies that this cannot be an impulsive wave. If this is not an impulsive wave, then it can only be a corrective wave. So corrective structure for wave A, corrective structure for the B wave, and an impulsive structure for the C wave, A, B, C. At this point in time, the focus shifts to the market pullback that follows. It is essential in a triple combination that the pullback that follows does not end, careful here, end beyond 61.8 measured from the start of the flat pattern until the end of it. So 61.8 would be probably somewhere around here. You can measure it by using a Fibonacci retracement tool, and that would be the X wave less than 61.8. The X wave can be like this or like this, but it's important to enter into the territory of this first ABC. This X wave is the first intervening wave or connecting wave, because in triple combinations we have not one but 2 X waves. If the market, for instance, would have gone like this, then this cannot be a complex correction, because if you project the time that it took for the C wave to fall on the right side of the market, here you will see that the price action confirms this one as a simple correction, which is not possible in complex patterns. So let's say this is the X wave. Then the market goes straight to the downside into an ABC. Let's go A, B, C. For the sake of this analysis, ignore this line here. Actually, let's delete it a bit. Like this. This would be an ABC. An ABC, as you can see, with the B wave that fails to retrace more than 61.8, and with the time that it took for waves A and the C wave, so this would be wave A, this would be the C wave, and this would be the B wave, with the time that it took for waves A and C almost similar, suggesting that the market forms a zigzag. So at this point in time we have what? We have an ABC, the first correction, an X wave as an intervening X wave, and an ABC as a second correction. As the Elliot Waves trader now, you should have in mind that if this X wave was small, and if this is a complex correction with a small X wave, the second X wave must be small as well. In other words, the second X wave cannot end beyond 61.8 of this ABC, but it should end something like this, the second X wave. And as mentioned in the article that comes with this video, the market, when forming a triple combination, always ends with a triangular pattern. Now, this triangle can take any shape you want. It can have the apex pointing to the downside. The apex is the combination, or when the A and C and the B to D trend lines meet on the right side of the chart. So if you project the A and C like this and the B and D like this, when the two lines meet, there is the apex. So it can be a triangle with a downward sloping apex, with an upward sloping one, or simply a horizontal one. It doesn't really matter. It is not like in the case of double combinations where the triangle plays an important role, saying if the pattern is fully reversible or not. In this case, this is just a triangle, A, B, C, D, E, and it marks the triangle, it marks the end of the triple combination. How do we know that the triple combination ended? Well, if you check the articles, part of this Trading Academy, that deal with triangular patterns, we should simply follow the rules of a triangle, and when the price breaks the B2D trend line in less than the time that it took for the E wave to form, that's the signal that the triangle ends. If the triangle ended, then the entire pattern ended. And this one, from here to here, is nothing but a triple combination that starts with the flat. The article coming with this analysis shows that triple combinations are of multiple types. They can start with a zigzag. They can start with a flat, continue with a flat, but always end with a triangle. You may even have two zigzags, and then for the third one, you will have a triangle. You can have a triangle for the X wave of a lower degree. You can have a triangle for this one of a lower degree. But it's unlikely that you will have a triangle here and a triangle at the end of the triple combination. This is the theoretical part of a triple combination as envisioned by Ralph Elliot. But the practical one, as you see here on the Euro-US dollar on the monthly chart, requires a bit of practice for seeing it. But nevertheless, it respects all the rules, at least so far. Let's move on with the second part, trying to figure out this possible triple combination. Bye bye.